Ladies and gentlemen, good day and welcome to the Suprajit Engineering Limited's Q3FY22 Earnings Conference call hosted by Anand Rathi Shares and Stock Brokers. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I would now like to hand the conference over to Mr. Vijay Sarthi from Anand Rathi Shares and Stock Brokers. Thank you and over to you, sir.
Thanks, Janice. Morning all. On behalf of Anand Rathi, I welcome you all to the Q3 FY22 results conference call of Suprajit Engineering. From the management side, we have Mr. Ajit Kumar Rai, the founder and chairman, Mr. N.S. Mohan, MD and Group CEO, Mr. Akhilesh Rai, the Director and Chief Strategy Officer, and Mr. Medappa Gowda, the CFO and Company Secretary. As always, we will have initial review about the current quarter, and then we will follow it up with Q&A session. Over to you, Mr. Ajit.
Yeah. Good morning, everybody. Thank you for joining us for our Q3 results call. I first of all thank Anand Rathi and Vijay for organizing this call. I would like to request our team to make a short brief on their respective areas. Mohan, Akhilesh Rai, as well as Medappa will cover some of the areas of our Q3 and YTD performance, and then I'll have a brief chat, and with that we'll start the question and answer. With that, I'll hand over to Mohan to start the first part of the discussion. Thank you, Mohan. Go ahead, Mohan. Sorry.
Yeah, thank you. Very good morning, everybody. Well, before I get into any kind of details, it's pretty obvious and to bring it to your notice that this was a difficult quarter for us. Now, it compounded with that we are comparing it with the same quarter last year, which had witnessed a sharp V-shaped recovery with all the pent-up demand that was clearly visible last year. As against that, this year, the third quarter faced both demand and supply challenges. The demand in two-wheeler industry was tepid primarily due to dropped rural and urban demands, specifically in the entry-level segments. I think, personally, I feel that it is more due to the EV uncertainty on the horizon, so people are not yet ready to put their foot forward to go and buy an ICE engine. Well, we don't know. Let's hope it's not so. Premium segments got affected primarily due to chip shortages. Globally, the chip shortages are still being experienced both in Europe and US, while demand looks to be pretty healthy. Overall, if I can comment, the commodity prices were not benign. The container and the shipping issues are continuing, and it continues to haunt us. So now, with this, let me get into the specifics at Suprajit. So as usual, what I will do is I'll cover each one of the divisions that we have. I'll start with the domestic cable division. Our performance here was reasonably good, and very specifically, we did an excellent performance. We had an excellent performance in our aftermarket segment. We have been able to pass on the material cost increases, albeit as usual with a kind of a lag, which generally happens because you have to go through these negotiations and convincing exercises with the OEMs. So we have been able to be reasonably good on that front. Our Narsapura project and also our consolidation of the aftermarket operations plant, both these projects are under progress, and it's going on at a good pace. Moving on to our Phoenix Lamps division, this is where we experienced some strong headwinds. Now, this happened primarily on the account of severe cost pressure, be it moly, tungsten, glass, or the gases like krypton. Everything kind of shot up. While we could have gone in for a price increase in the aftermarket, being the market leader, which we did earlier once. Here, this time we took a conscious decision not to, as this was going through what we call it as the aftermarket scheme period, where we all the shelves are being populated by our product. And any price instability at this point in time can rock the market and basically attack the market shares. Therefore, we did not want to do that. Similarly, on another front, with one of the OLMs, we have not been able to revisit the prices as we have had a fixed price contract. However, this will be addressed when it comes up for a review. The good news, however, is at the OEMs, we did manage to get the price increases. This was a tough exercise, but I think we were successful there. But you have to note that in the overall scheme of things, the OEM content is lower. Our aftermarket clocked a very smart growth, and the drop-in solution of LED has been accepted very well in the aftermarket. 3.5 and Luxlight continues to be a challenge with severe COVID restrictions in Europe elsewhere. From PLD, if I can move on to the non-automotive segment, here we have had the growth as planned, and also we have been able to pass on the cost increases. The resistance levels were more because they are not used to this much. However, the team did a great job, in my opinion, and many of the increases kicked in from January of this year. Therefore, we have been successful in passing on the cost increases there. On the automotive exports front, while the schedules from one of the major OEMs is getting more and more stable, the other one continues to show volatility. Apparently, the reason is supposed to be chips, but that's what we come to understand. While overall we do have a growth, the uphill task of ensuring that price increases are getting passed on to the customer, I think that continues. However, we will continue to push for the price revisions and claw back on the cost increases. And we have already placed these requests in front of these OEMs. Container costs and shipping costs are yet to get under control, and again, it's pretty high, I would say. Moving on to the last part, our technology center. Our STC, or the Suprajit Technology Center, continues to get us some good commercially exploitable products, particularly in the areas of instrument clusters, electronic throttle controls, combi braking system, parking brake handles, and gearbox for seating mechanisms. These kind of things, I think we have started getting good traction. We are aggressively demonstrating in the marketplace, both at the OEM level and otherwise. And we have got a very good positive responses, both from established players and also tremendous interest from the new players too, very specifically the EV players. Therefore, all in all, I would say that our investment into STC will start paying off as we go forward in the Suprajit story. With this, I end and I hand it over. Thank you.
Thank you, Mohan. Akhilesh, are you on? Will you give a quick brief on LDC?
Yeah, I'm here.
Okay, good. Go ahead.
Okay, I'll keep my update short regarding the KLDC acquisition. Things are going well with the various work streams, and the Suprajit teams are working globally to make sure the integration process works smoothly, and KLDC becomes a strong part of Suprajit going forward. That being said, even though we've got all the specific legal and regulatory things in place, we still had a slight delay in some of the operational carve-outs, specifically due to some COVID-related issues at KLDC. Suprajit had an option of, waivering this as a condition precedent or a CP for closure, but we've decided that, you prefer that all these carve-outs are completed before the closing date. So this means that we're looking at a few weeks delay in closure, probably in April. The date has not been fixed yet, but that's the only update from LDC. Back to you.
Thank you, Akhilesh. Medappa will give you a quick update on the numbers.
Yeah, thank you, sir. Good morning, everyone. We announced the financial results for the quarter and 9 months ended December 2021. The results are not exactly comparable for the corresponding period of previous year due to COVID scenarios. The consolidated revenue for the 9 months ended December 2021 was 1,335 crores as against 1,128 crores, recording a growth of 18%. The consolidated operational EBITDA for the 9 months ended December 2021 was 190 crores, as against 155 crores, recording a growth of 23%. The standalone revenue for the 9 months ended December 2021 was 915 crores, as against 766 crores for the corresponding period of previous year, recording a growth of 20%. The standalone operational EBITDA for the 9 months ended December 2021 was 157 crores, as against 122 crores for the corresponding period, with a growth of 29%. We are also happy to inform that overall group debt level has reduced to 291 crores, as against 327 crores as on March 2021. Further query session, you can approach me anytime, even after this investor call. Thank you.
Thank you, Medappa. I will quickly give a quick sum up before I let you all ask questions. I think the Q3 is, how would I say? I would say that it's kind of a deceptive quarter for us. The reasoning being simple. I think the first round of price increases, both at the vendor end and from the customers, were all fairly well done by September. Whereas in the third quarter, there were continued price impacts, whereas we were forced to give some of the price increases to most of the suppliers, whereas the reciprocal from the customers had not happened. It is being done. It will happen. So, in a sense, the Q3 numbers are somewhat skewed because of that one-sided impact. However, what's more important is to see the overall. I think that for the 9-month period will give a more appropriate and correct view of how the company is performing. As you would see that, in fact, even our EBITDA margin on a YTD basis has improved, as well as our overall growth, which has been at about 18-19%, is almost double that of the automotive growth in India, which is at about 8%. So on a YTD basis, you would note that it is in line with the guidance that company has given, that has been for quite a few years now. We are very well consistent within that range. The last part is about the Q4 performance. We expect Q4 to be reasonable. The challenges of chip shortage, challenges of certain customers changing their schedules continues to be there. We expect the chip shortage issue is still going to be there for another 6, 9, 12 months, I think. It may not be as intense as it is seen, but it will continue to be there, disrupting operations across the world. However, we expect Q4 to be fine, and we will end up the year in line with our guidance that we have always given. So overall, I think we feel that everything is under control so far. So thank you very much. With that, I will let the moderator to take over and let the question streams to start. Thank you very much. Over to you, moderator.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Before we take the first question, a reminder to the participants, if you have a question, please press star and 1. The first question is from the line of Mumuksh Mandlesha from Emkay Global. Please go ahead.
Yeah, sir, thank you so much for the opportunity. So just want to understand, can you indicate how many cables are required in a scooter versus a motorcycle, and also how is it different in an electric scooter?
Mohan, will you answer that question?
Yeah, sure. Now, between scooter and motorcycle is the first question. So I will handle it separately, and then I will come to the EV portion. Now, between motorcycle and scooter, motorcycles again has got 2 segments within that. One with ABS and one without ABS. That means depending upon the engine size. So in those entry-level segments, the number of cables are higher because you have also the braking cables coming in. Whereas when you go to ABS, the number of cables comes down in a motorcycle. In scooter, by and large, comparatively, I would say on a ballpark number, it would be similar kind. So there is not much of a change. In scooter, there would be additionally a C plus cable. So to that extent, that makes this change. Now, moving over to EV is a completely a different animal. Therefore, to that extent, it changes where the number of cables gets reduced.
So is it possible to quantify what kind of a reduction would be there for in EV segment?
It again depends in the sense that how the customer is designing the product. For example, if they go for an ABS, for example, in the product, then the cables will be less to that extent. If it is a regular drum vehicle, then again the cables will continue to be there. Where the challenges come is in probably the throttle, where purely because of EV, if you look at it, the throttle control can be electronic. That's why, as we have said earlier, electronic throttle is one of the products which is getting launched, and in fact we have got some commercial of business as well in this from some of the EV guys. So that one cable certainly comes down. So I would say overall there is a reduction, but the numbers depend from product to product actually.
Thank you so much. Sir, what will be the major customers in EV space, sir?
Again, Mohan, will you answer generally what are all the customers you are currently dealing with?
Sure. Can you hear me?
Yeah.
In EV, we are supplying to Hero Electric, and we are in discussions with quite many others. But majorly, I would say that our products are readily going into Hero Electric. Other than Hero Electric, we are also in discussions with people like Ola or Okinawa, these kind of people. Then with the established players like Bajaj or let us say TVS iQube, we are already supplying.
Right, sir. So one just a question. In this quarter, was there any impact of the acquisition in the numbers, sir?
Sorry?
In this quarter, was there any impact on EBITDA level because of the acquisition?
Yes, the acquisition is not complete, as Akhilesh just briefed you. But then the cost related to the acquisition is, since all the entities of LDC will be held by Suprajit US, about $1 million worth of expenses are booked in the Suprajit US books, which you will see in the consolidated in the other income.
Right.
That would be an additional expenditure for the quarter.
So it happened in Q3, right?
In Q3, correct.
Yeah. Thank you so much for the opportunity, sir.
Thank you.
Thank you. The next question is from the line of Priya Ranjan from HDFC Mutual Fund. Please go ahead.
Yeah, hi. Couple of things on margin front. So how do we look at the lamps division margin? Because that is broadly we are more into the aftermarket. So what is driving the margin down there? And it has been very volatile since last 5-6 quarters if you look at. And secondly, on Sena, as you mentioned that there are probably the cost pass through has not yet happened, right?
Yeah.
So can you just explain the margin?
Sena, I think margin has been fairly steady. I think there has been no issues there. I think for a quarter that few things, but if you look at the YTD, it is in the similar level, and I think it will also recover quite well. As I just explained, about $1 million of additional expenses sitting on, Suprajit US for the quarter in relation, which is connected with the acquisition cost. On PLD, I think actually Mohan has explained, but I'll ask him to again explain on the PLD margin.
Sure. See, on PLD, like what I said, there have been huge cost pressures, and obviously the question is your ability to pass on that cost to your consumer or your customer. Now, here there were two portions to it. One portion is a conscious decision that we have taken not to pass on the cost increases. The reason is very simple, because we were going through what we call it the aftermarket scheme. This aftermarket scheme generally runs from August 15th to January 26th, where from Phoenix, what we do is we try to push the products into the market Therefore, they are all sitting on the shelves. And we literally block the competition to get in here. Therefore, it is chock-a-block. The market is chock-a-block with our brand. So this is what we do every year. And in this time period, if we go and tinker around with the price, it can have different kinds of effect. And one of them could be loss of market share. So the question was, do we want to take that or not? We took a conscious decision not to. Therefore, can we go and increase the price? The answer is yes, because we are the leaders, the market leaders. And we have shown our leadership position by increasing the market prices last time. So we were just waiting for the scheme to get over. The other portion was with one of the other label manufacturers, or OLM as we call it, the segment, where we have a fixed price contract. So here we could not go and touch the prices. Therefore, we were constrained here. One was conscious, another was constrained.
To add to that, I think, the second part of it, the fixed price will get over pretty soon. So I think we'll be able to get the price adjustment done. Whereas with the OEMs, we have been able to get price increases. But so you must realize that the aftermarket business in PLD is about 70%. So that is one of the main reasons we are waiting on. I think now with the time, we are in the process of finalizing the price increases in the market. So it will effectively come into picture from the next year, just to complete the point.
Okay. And in terms of the cost inflation or the commodity inflation, how much is it's helping in our top line as of now? Because if we are getting...
Oh, I see. Okay. Yeah. But difficult to assess because different divisions, different places are at different level. I would say on the top line, it may have, this is a ballpark number, maybe 5% maybe, 6% probably at best.
Okay. And in terms of the demand outlook, I mean, any improvement you are seeing from the OE side? Because on the ground, it's not fully visible, at least in the two-wheeler side. So what's your thought on that?
Agree with you. I think we also believe the same. The two-wheeler entry-level segment, there is a 100cc up to 125cc segment, is undergoing a severe headwind in terms of the market volumes. I think that is where, some of the leading two-wheeler manufacturers also have dropped significantly the volumes of manufacturing. We don't think that the headwind will go away. I think it's going to be there for some time until the entire economy really picks up from the, from the rural market sides as well. The reasoning is simple. I think also the aspirational issues of people, historically 25 years ago when two-wheelers became a rage and everybody was in 100cc bikes, the rage was to go from a cycle or a moped to a motorcycle. Now I think the aspirations are going from not 100cc or 125cc, but to go for a higher end bike. So I think that is the kind of market shift along with the, market economies in the grassroots level is affecting the thing. So I think it is not transitory. I think there is going to be a little bit of stickiness in this, according to me, personally. I hope it is not so, but that is what we think. Having said that, I think, overall volumes also has come down in the sense that I think two-wheeler numbers are probably this year would be something like a 10-year low, as we have mentioned. I think it is so everywhere. Even China went through a huge volume and then the volumes came down in the last 5, 6, 7 years. I think we are also going through the same process. But what is good for us, I'm giving a little more perspective to it, is that come next year when the LDC closure happens, two-wheeler business will be only 20% of our business from what it was 95% 10 years ago. So we'll be a little less impacted by all these market dynamics. But yes, I think the markets are weak for the two-wheeler, particularly at the entry level.
And one thing on LDC, so the moment you get the entire acquisition process done, so what is your game plan? Is it, you want to transfer the production to India or you want to keep it there? How is it?
No, I think more at a philosophical level to answer. I think so far Suprajit was made in India, made for the world. I think now that works pretty well all these years in our growth strategies. And, we had our warehouses in various parts of the world and we deliver to our customers from the respective warehouses. Still, we're able to do just in time of the day kind of situations. But the COVID has changed the psyche of customers significantly. They want to have a lot more local manufacturing, even at a cost, simply because these, today one of the biggest challenges, container shortages, transshipment delays, port congestions. It is all scaring the customers. So I think this LDC is a perfect fit with that kind of an outlook from the customers. So we are able to now offer customers in North America from Mexico, European customers from Hungary, or Chinese customers from China instead of made in India. I think that will give a lot of comfort with a strong manufacturing base in India as well, where true volumes can still be made with a cost effectiveness. So the strategies are slightly changing in line with the customer needs. I think that's going to be a big win-win for Suprajit in the next 5 years.
Okay, understood. All the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Jitendra Khatri from Tata Mutual Fund. Please go ahead.
Yeah, sir, I wanted to ask you, when you were targeting the e-throttle for Okinawas and others, so are you having the same margins there with the general ones you make? And secondly, so is it that currently the OEMs are doing it in-house, or you are grabbing someone's market share? How is it working there?
No, this product is a new product in this segment. So the customer is not making it. It's the suppliers who are supplying this to them. In terms of margins, we believe it's a very good margin product. In fact, we are pretty excited. It's also, in addition to the margin, it adds to the value of the product, our market, wallet in the two-wheeler industry. In fact, today with the STC working on some really wonderful products for the two-wheeler as well as other industries. In next 3 to 5 years, we believe that our wallet share in two-wheeler manufacturers will be much more than what it is today with only the cables. I think that's how we look at it.
Okay. And sir, are you seeing the two-wheeler OEMs showing as much flexibility in outsourcing as you see the ICE engine ones doing historically?
Sorry, I didn't get the question.
I am saying that are they as much willing to outsource to suppliers, just as, let's say, a Bajaj, Hero, Eicher, TVS would do, or because of the electronics involved, you see them doing more in-house? Just trying to sense.
Today, basically, at least the manufacturers are, preferring to outsource as much as possible. Insourcing actually adds to their overheads a lot more. Finding efficient suppliers is the issue. So I think that's what they are trying to do.
Okay, so the outsourcing trend is still there.
Very much there, yes.
Yeah. Thank you so much. Thank you.
Thank you.
Yeah.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead.
Yes, thanks for the opportunity. Sir, my first question is on raw material and its sourcing. So, do you source
I can't. Can you please repeat? I can't hear you.
I hope I'm audible now.
Yes.
Hello. Yeah. Sorry for this trouble. Sir, the first question on raw material sourcing, basically, are they at spot rate or they're at contracted rate? How it works for you? If you can help us understand that.
Yeah. It is a contracted rate most of the time. But the contract, although there is a timeline, if there is a significant increase, just as we go to the customers, suppliers comes to us. So, but I would say only in steel, it is to some extent spot, because that rates fluctuate quite a bit, which is also about 40-50% of our input in terms of our product, which is fairly spot. Every month, every 2 months, they come for a discussion, negotiation. Whereas the rest of it generally is a contract.
Yeah. So I presume that is true even for the PLD division, right?
PLD doesn't have much of a steel requirement. There are all components, which are also gases. Gases are also spot, which is a humongous cost. So yes, there is also both spot and contract combination.
Yeah. So, sir, the question that I wanted to understand is that to the extent when you look at the pass-through of costs, so is it right to assume that large part of the costs have been absorbed and it is more about pass-through which is left? Or given the nature of contracts that you have, the actual impact of the jumping prices is yet to come in your own cost sheet because of the contracted prices that you are working with?
Yeah. The contracted price also, Chirag, even though if there is a contracted price, let's say with a supplier I have a finalized price for the annualized basis, if the price increase is too hot for him, he comes running and, if you don't give him, he starts choking the supply. So the contracted price is more on paper, really speaking, I would say. Spot rates, of course, keep going on up. To me, okay. I think in terms of our own impact on our input cost, I think they are all been absorbed. It's fully in. Whereas in terms of customers' relief for it is not fully in. That's what has been seen in the Q3 actually.
What would be the under recovery as of now, if you can indicate, is it 200 to 200 bits or it is more than that?
The reason for, it's probably more, but the reason for us not to be able to give a percentage is because negotiation is, always difficult to say where it will end. We are asking for, let's say, 7-8% and customer starts with 2-3%. And then, we come to somewhere in between after a lot of discussions and negotiations. So it's difficult to say. Suffice to say that if you sort of normalize everything, we have been able to mostly manage domestic price increases. Global price increases, particularly automotive exports, it is not normalized. We are still starting the discussion with the customer. So except there, I think generally we are able to manage. PLD, we are still in discussion, particularly, we have got some contracted prices which when it comes for a negotiation, we need to see what we will get as a price increases. So there is a little bit of a question mark, but it's an ongoing exercise. I mean, on an overall basket, when we say we will operate in 14 to 16% EBITDA margin, we are still confident to say despite last 1 year of humongous price increases to continue to say that we will work in that operating margins. That's what our understanding of the overall current book is concerned.
No, sir, very helpful. This is very helpful. The question was because last quarter, you were relatively confident that worst is behind on the cost sheet side, and the pass-through will happen and business should normalize at least going ahead. But it seems it has got postponed by another quarter or two.
No, I think you probably are right, Chirag, on that. I think the issue was, we went to customer already twice in the last 12 months. These are third time we are going, So there has been some amount of, I would say, cribbing on this. So to that extent, I think we could not complete everything in December. But knowing what has happened subsequently in January and February, we are confident to say that, we are able to recover quite a few of that. Maybe, as I said, probably some extent in PLC. Yeah. Thank you.
Yeah. Thank you very much. The second question was on throttle control unit.
Yes.
Can you elaborate on that? You indicated you are working on a throttle control unit as a replacement to throttle cable.
Yes.
Did I hear it right? What exactly is that?
It's a replacement for the throttle cable. I'll ask Mohan to probably elaborate a little bit on this.
Yeah. So just a follow-up on that, sir. What exactly is the product and when do you expect to launch it? What exactly is that product? When do you expect to launch it?
Product? Okay. Yeah. Mohan?
Sure. Well, you see, when you want to accelerate, you already have this, to your right side, a kind of a grip which you are going to twist. And that's going to pull a cable in an IC engine, and that either goes to an electronic throttle control, electronic fuel injection equipment, or an electronic carburetor. Okay, now that gets replaced here. Instead of a cable, what we are having is, it is a completely IP65 or IP68 level. That is completely environment protected device, which has got a kind of a sensor inside, which is going to sense the amount of twist that you are going to give. That twist is going to send the signal to either to an electronic fuel injection equipment or to a motor control unit. If it is a EV, it's a motor control unit. So this is what we are doing. But what is interesting in our model, as Suprajit, what we have brought out, is some, I would say, added features, like how can you do a reverse? Even by chance, due to a mistake also, you should not be, if you just twist it the other way around, it should not get into reverse. So there should be a locking mechanism. These are a kind of things. And also a lot of, I would say, EFI protection itself. So that is what is making our product more unique.
So when do we expect to launch it? So is it in the trial runs or test runs, or when can we expect, and how realization move? Because throttle cable is generally a high price product within the cables family. So will the realization be more and bought out versus manufacturing? How is that will be? I presume there will be good amount of bought out component in this in the initial phase.
Well, it will have a sensor. Since it has a sensor, it has to be, parts of that would have to be bought out. We have our own injection molding, done in-house. Therefore, that continues to get utilized, and we will do the assembly here ourselves. But what is more important is the patent that we are going to hold on it, which is going to bring us some IP protections, I would say.
And to add to that, I think, Chirag, the throttle, this electronic throttle control that we are talking about is a much higher price than the cable. It is not that 2, 3, 4x. It's much more than that in terms of the price per product. So although throttle cable is higher priced, but I think this product is much higher priced. So it will, as I said, made a statement. In 3 to 5 years' time, we believe that we'll have a higher wallet share of two-wheeler as far as Suprajit is concerned.
And it would be helpful at some point of time. You can also indicate, are there?
I can't hear you.
A small request. Indicate more about similar other products that you are working on, and the kind of journey you are trying to achieve in increasing the content in the two-wheeler space. It would be helpful.
Yeah, sure. I think Mohan will do that. I think in the last, Q2 thing, we have given a list of products that we are working on from the STC, where a lot of commercial work is there. And also, we had sort of made a statement that we have got orders worth 100 crores from those new products that Suprajit Technology Center is done. Please have a look at it. And I still would like Mohan to probably brief on the products and type of stuff that we are doing at STC.
And Mohan didn't indicate when do we expect this contribution from this control throttle unit? When can we expect it flowing in P&L?
Well, it will all depend upon the kind of ramp up that we are looking at with the customers. Right now, we have already submitted the samples. We have fitted it onto their vehicles. It is undergoing extensive trials. Therefore, once the overall product vetting has been done, then we get into the mainstream production. So in terms of timeline, it is more dependent on how fast our customers can move ahead and get some homologation in case it is needed, done at their end, at a vehicle level.
Thank you. The next question. Yeah. Oh,
yes. Go ahead. Yeah.
Next question is from the line of Deepak Lalwani from Unifi Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, just a clarification on the LDC acquisition. So this $1 million USD is a one-time cost, or is it going to recur?
It's a one-time cost, or all the for the due diligences, legal counsels, and we operated out of 5 countries on diligence. So it's the cost of it. It will be one-time expenditure. I mean, it is not complete. I must answer that, because till closure and little after that, there will be still some costs coming in. Once it is done, I think probably I would say March, April would be the last April. But most of the expenditure has been booked in, but I think there will be some more to come. But it will be one time, yes.
Got it, sir. So for Q4, should we build in any cost related to this, or
We have, of course, there is some costs ongoing on this, but I mean, we can't quantify it now as we are halfway through the closure. So it won't be anything near to that 1 million that I mentioned.
Okay, sir, got it. And sir, since you mentioned that 70% in the Phoenix division is still pending to take a price hike, and even in the international OEM business we need to take a price hike. So is the assumption of of Q4 being on the lower side of the margin, like 14%, is it a fair assumption?
Still we are still in discussion with the customers. It's very difficult to say where we'll end up. It's very difficult also to give a very clear commentary on a quarter simply because sometimes the timings, particularly in automotive industry, is different when the impact happens, when the pass-through happens. So that's what has been the effect of Q3. But I think Q4 would be better. But if you say what is the percentage, I don't want to say because it's difficult to say. But all I want to say is that on a YTD basis or even at the year-end basis, the guideline or guidance that we have given in the beginning of the year that we'll operate between 14 to 16% on a consolidated basis, EBITDA operational margin, and a growth of 5 to 10% more than Indian automotive growth. This is our stated position on both margin and top line. I think that will perfectly hold good as I see it.
Understood, sir. And sir, on the new products which we are doing in the STC division, what will be the margin profile there?
Again, some of them have gone into production. I think I would say that it would continue to, all I would say that it will continue. Mohan, would you like to make a comment? But my view is that the products some of them have been launched, some of them are yet to be launched. So the commercial terms are under discussion. So, it's a very difficult question. Maybe 2 quarters down the line, we may be able to answer it better. But our view is that some of these products have excellent margins. In fact, some of the products that we recently finalized, for example, a fairly large project for the next 2-3 years' time for North and South American market, I think where the margins are phenomenally good. So some may be exceptionally good, some may be not that great, but as a basket, I would think that the idea of setting up STC is to come out with products which are proprietary in nature, which will be patent intensive, so that we will have a ability to price the product as we want or to the best of our ability. So that would mean that they are all basically decent, good margin products.
Got it, sir. And sir, last question from my side. So the Phoenix Lamp division, it hasn't performed after you have restructured it and after you have taken more steps 3 quarters back. So you do think more work is pending on the restructuring side and some processes need to be tightened up even further to show performance in this division?
I think the performance improvement or enhancement is an ongoing process. I would say that it is not only in PLD division, it happens in all our divisions. PLD has been a special case simply because, of course, now we are in the 7th year of acquisition. As we stated in the beginning, after 5 years, it will be more and more LED, and that's what we are seeing. The growth will have certain challenges, but the idea is to see how best we'll keep our market leadership in the aftermarket, where we could price the product. As Mohan explained right now, I think one of the reasons has been that we decided not to do it due to certain specific, business reasons. But the point is that, it will continue to generate cash, it will continue to generate margin. Whether the margin will go up or down by a couple of percentage points, I think that may happen in PLD. But our idea is to make sure that, we continue to keep the market position so that at some point when the capacities vanish across the world, we'll again have the marketing and the pricing power, which would help us to bring back and claw back the margins. It is a journey of highly competitive position. I think we are doing well. All I can say is that most of our competitors are bleeding in this market, whereas we are still generating cash.
Understood, sir. Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Nakshita Mehta from Credit Asset Management. Please go ahead.
Hello, good morning actually, and thank you for taking my call. I had a couple of questions. One on the acquisition of the Concall Automotive. So what kind of synergies are we expecting from this acquisition? What kind of EBITDA addition are we expecting?
Mohan, I'll say that, as I think we mentioned in the last call about the EBITDA margins, I think they're operating at about 8-9% EBITDA. Hopefully, once we get in and get a full hang of it, they are also having a much higher overheads due to the way an MNC like them is structured. So we're expecting to get some improvement on that. That is as far as the margins concerned. On synergies, Mohan, would you like to comment?
Sure. Basically, it has got two types of synergy. One synergy, obviously, is the geography synergy, where we will get manufacturing footprint across, because in automotive segment, we don't have it in the North Americas. Therefore, we get a manufacturing footprint there. We get a manufacturing footprint in Europe, in Hungary, which is a low-cost country within Europe, I would say, and also into China. Therefore, there is a geographical synergy. Second is there is a product synergy. Product synergy in the sense that we will be able to expand our market both in terms of automotive and non-automotive. And more importantly, there are certain segments of the products which we are not yet into, which is going to be brought into the stable. I think to that extent, it helps us. These are the critical synergies that we will be getting.
So, will it be possible to, throw some light on the products that you are not yet into and you are planning to get into?
Mohan?
Yeah. No, Akhilesh, you want to answer?
Yeah, sure. So, if you look at the background of LDC, they are basically into seating actuation systems. So, they have a cable-based system and it attaches to a kind of a motorized actuation system. This is something that is not done to a big extent even in India. So, if you look at synergies, bringing that technology to India is also another very interesting opportunity. But we were also not in the seating cable business to a large extent. We were very small in that space. We were more in the cables that go into, your fuel lid opening or foot release or parking brake. We were not into this seating cable mechanism system, which they are big players in, and they're probably the biggest in the world for that specific cable product. And that's what we will be, a big product that we're going to be capturing with this. In addition, in terms of technologies, a lot of the technologies built at the tech center are very focused to be a global player. And, we will be getting a global customer base, both from LDC and, of course, with Westcon and our current global footprint. So this brings a very good synergy where we can bring a lot of new products to new markets and, put the agenda of Make in India.
Right. So can we assume that most of these new products will be in the two-wheeler segment because we are planning to increase the wallet share in that segment?
No, Akhilesh, can you answer it? Yeah.
Yeah, LDC has got very minimal two-wheeler exposure. They are in automotive. They mainly figure in the passenger vehicle side. So LDC, you can't look at the two-wheeler. Two-wheeler is mainly in our cable division, domestic cable division is the main supplier to two-wheelers. And that's where all these clusters and throttle and all that come in. In the global market, we would look at things like actuation systems. We would look at these gearbox systems that you talked about from Tech Center, which is focused on, everything from precision agriculture to power sports to all these other industries. But LDC doesn't have a big two-wheeler customer base. They mainly supply to Honda in China. And of course, we are one of the key suppliers of Honda in India as well. So we will become a very important supplier to Honda two-wheelers as well. So I hope that answers your question.
Yes. Okay. So thank you for this. My next question is on the the cost situation and the chip shortages. So what is your outlook? How long is it going to continue, and what is going to be the effect on demand?
I just answered that question to somebody else, but I'll ask. Let's see here, Mohan, our managing director's view on the same.
Well, the chip shortage, at least from what I have been hearing from the industry sources, is going to continue because it has got multiple dimensions to it. It's a capacity issue, number one. It's a capacity allotment issue, number two. And also it is a technology issue, because what gets into the automotive industry is a specific technology which is slightly outdated. Therefore, probably the industry is not ready to invest into the capacity there. Therefore, it's a multi-dimensional issue. Is it going to go away soon? The answer, I don't think so. But will it? Of course, it has to stabilize over time. Somebody has to see that there is an opportunity here.
Okay. And my last question would be on the throttle control unit. So by when can we expect, to capitalize on this opportunity, or when can we expect these products in the market?
Mohan?
Yeah, I just explained that. We have already submitted the samples and it is undergoing testings with the OEMs, and it probably will have to go in certain areas with homologation at the vehicle level. Therefore, once that gets done, we are ready to go. As far as we are concerned, we are ready. From a product perspective, we are ready. From a process perspective, we are ready to launch.
Okay, so can we expect in say second quarter of FY23 or something?
I think it's it's a fair chance to say that, yes.
Okay, thank you so much, sir, and good luck for your product.
Thank you.
Thank you.
We'll take maybe last two questions, moderator.
Sure.
So that by 12 o'clock we can wrap up.
Sure. So we'll take the next question from the line of Rakesh Jain from Axis Capital. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Sir, I just want to harp on the margins which you had said. So can you tell us what was the margin impact due to the price hike you gave to the suppliers, and for which you are yet to receive the compensation? And on similar line, the question is, what is your gross margin impact on different business levels? For example, auto, non-auto, cables and lamps, etc. If you can highlight that too.
I think the second part, I think you probably can talk to Medapa offline. It is differently affected, so I don't have the numbers with us right now. But overall thing is that, in terms of the net impact for the quarter, probably was about 4-5%, I would say, because what has happened in this quarter was we had to give the price increases to suppliers during beginning and as the quarter went by. Whereas we had just finalized a price increase with customers probably, I think, in, anywhere from July, August, September. So we sort of waited for a month or two because, this is the third time we are going for the customer price increase. So it's, there's so much of pressure from them. So we sort of delayed it a little bit. So the impact of that, whatever few percentage points would happen in Q4. And, we expect that most of it will be given by the customer. So there is a timing effect. I think that's what is happening.
So is it so out of the 4-5, is it equally divided between the domestic and the export market, or it's more driven on the export side right now?
No, I am talking about more domestic, let us say, divisions. Whereas in exports, I think on automotive, it's a contracted price. You don't really get price increases. Whereas what is the advantage happening now of late is that we are also launching the new products which has been, won by us. So they are all at the current prices. Having said that, I think as Mohan explained earlier, 2-3 of our major customers we have gone back, despite the rate contract, saying that we need a price increase. They have not said no. They are asking us to keep coming back with more details. We are providing them. So we will know probably in this quarter whether we will be able to get that impact or not. Whereas in the non-automotive, I think most of the places we have been able to pass on the price increases, generally speaking. And that's why the margins on a YTD basis are generally similar. And as Mohan explained on the aftermarket PLD, we consciously delayed the price increase, which we will be doing now. And with one major customer, there is a contracted price which goes to another 3, 4, 5 months. Only then we can get it. That's why you see a little more intense price impact at the PLD division.
Sure. So next question, you have indicated a lot of new products, e-throttle and everything. So how do you see your capex moving forward for this year and for next year?
As you said, I think in the last release, Rakesh, I think we mentioned about 125 crores investment for the current and the next year. But this is a dynamic situation, as you rightly said. We are seeing which one gets commercialized first and which one gets launched and where the pull is there. So it will go through another iteration during the course of probably year end or whatever it is, depending upon the position. So that 125 crores, will it go up a little bit? Possible, but at the moment we are sticking to that as our capex for current year and next year.
And one final question I had on the export cable market. What is your currently quarterly run rate and how are you seeing the growth over there?
Yes, you are talking about automotive sales. Yeah. Okay.
Yeah.
Automotive, okay, let me give you a world perspective on automotive. Actually, the automotive volumes have shrunk last calendar year, that is 22 calendar year, by 10%. And the 21 calendar year also had a 10% drop. That means nearly we are off by 15, 18, 19% from the 2019 levels in the global car automotive market. Every customer has been affected, and so have we been. So although we are showing a decent growth in the automotive division, that is between SAL and SCU, which the growth is good, but actually we were expecting a much higher growth. That growth momentum has come down because of the volumes have come down. So both major customers, whether it is Volkswagen, Renault, Nissan or BMW, all of them have cut the volumes. And they are saying that from April, May, things will be a lot more normal. That would mean that next year could be a very good year for exports. But again, as Mohan said, and I also believe, chip shortage is not going to go away that fast for some time.
So I believe that the non-auto part is still growing better than the auto part right now.
Yeah, we have seen that. No, if YTT number, if you see, Sena has grown much better than others.
Okay. And you can continue growing that for next several quarters.
At the moment, that's how it looks. But yeah, I think it looks fine.
Okay. Thank you so much for your time.
Thank you. We'll take one last question, moderator.
Sure. We take the last question from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for the opportunity. Sir, are you looking to launch digital speedometers under SPC?
Yes, of course. I think Mohan, will you give, that's one of our key products for the next few years, but I'll let Mohan to explain.
Yeah, the answer is definite yes. And just to give some more color onto it, we are going on a platform-based approach where we have what we call as Supra 1.0, Supra 2.0, Supra 2.5. They are all different levels of technology versions of instrument clusters, which are more geared towards a two-wheeler segment. Therefore, this is what we are focusing on.
And to add to him that we have one new contract and we have started even deliveries to a couple of customers, and it will start accelerating in the next 2-3 quarters.
So there's a strong opportunity size because of that. There's a strong demand for e-two-wheelers and the premium scooters of these. So have you started supply to some domestic OEMs?
It is for domestic people only we are talking. I don't want to mention names. This is a very competitive and sensitive subject to disclose the customers at this moment. We are in discussion with multiple customers, OEMs. And of course, quite a few of them are also EV customers. So that's why I said in the next 2-3 quarters, you will hear more and more about digital clusters from Suprajit.
And what would be the content per vehicle of this particular product?
It depends upon, as I say, as Mohan said, there is a Supra 1.0, which is a basic model. 2.0 is a next level, and 2.5 is the highest end that the customer will require. The price point will be anywhere from 500, 600, 700 bucks to 2,000 rupees. Am I right, Mohan, in generally giving a number?
Yeah, ballpark, yes.
Correct.
So you are supplying only the cable or whole?
We're talking about the digital speedometers. Cables, of course, is a different matter.
Okay. Thank you, sir. That's it.
Okay. Thank you very much. I think moderators, we will call it a day now, I think. Thank you very much.
Yes, sir. I'll
just say that thank you very much for your continued interest. If there is any further information any of you need, please contact Medappa, our CFO, for additional information. I appreciate your continued interest in Suprajit, and thank you very much for joining our call. I hand over to the moderator and thank Anand Rathi and Vijay again for this wonderful opportunity to exchange our views with our investors. Thank you very much.
Thank you very much. On behalf of Anand Rathi Shares and Stock Brokers, that concludes this conference. Thank you all for joining. You may now disconnect your lines.